Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Today we're going to talk about this bull market that we seem to be in. We're going to talk about what's going on with it, why it has been running up and seemingly defying gravity when other things are saying otherwise. And then we're going to also talk about those things that are saying otherwise because it's really important to kind of put everything into perspective. And so we're going to talk about what to expect going forward over the next couple of weeks. So let's dive in.
Trade Genius.
Hey guys, I'm gonna tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Hey Bob, have you ever seen a bull market that has basically been driven by like 7 stock names? I'm just curious.
I was always asking me if I ever saw a stock market in Zimbabwe, but yeah, no. I mean, this is amazing, and the reason why we talk about this guy, because people say, "Well, it's the market, it's the market." Well, it's not true. Most people aren't trading these 7 names. So you have here in this chart is pretty amazing. I was dumbfounded when I saw this because you intuitively knew this.
Yeah.
Is that if you took out the AI related names, which is the bubble du jour, the market is down under 4,000. Okay.
Yeah.
With them in there, it's at 4,500. And it's because of the nature of the stocks that they picked. You're talking Nvidia, you're talking Google, you're talking Microsoft, and it's just been jamming the market. And so most people, though, when they open up their 401ks, will not see that their performance is up there with the red line, Phil. It's going to be somewhere between the red line and the gray line that shows the rest of the market.
Right.
And we have a couple things coming at us, though. So remember that rebalancing is still sitting out there for the 24th.
Right.
All right. With the Qs still pushing and the SPY still pushing, that no rebalancing has been done yet, number one. Number two is open interest now is starting to fall off a cliff on the out expirations, Phil, which means that these guys have no place to hide. So they're going to have to close their call positions, which means that the market makers are free to short. So I think you were telling me before that, we have a VIX expiration coming up. Is it Wednesday morning?
Yeah, this Wednesday morning, and we typically get a dip right into that.
Right. Well, what's interesting is that our mantra on OPEX week, Monday up, Tuesday up,
Correct.
Wednesday down, Thursday down. That's probably part of it because that VIX, they tend to run the market into that expiration. Then they dump it for 2 days. Then Friday, they look for a balance for the week. So, yeah, so probably I would say tomorrow is probably likely an up day again, Phil, Tuesday, and then Wednesday, Thursday. And then for the rest of the month, it does scream bearish. So we'll just see. But in the meantime, Bitcoin decided to start that party early because it's not really attached to expiration. Those Mara puts that I bought, I told everybody about on Friday. I closed them today. Really nice trade for us. Even though it's probably more to it, I just don't like all the jumping around this market does. So see profit, take profit.
Yeah, and Bitcoin's losing this big range. I shouldn't say losing it, but it's at the risk of losing it. It's toward the bottom of the range. And it's a big 25-day range. Typically, when Bitcoin loses a large range like that, it turns into pretty big resistance. So that warning we gave when we covered those miners, I think is going to be prudent, because if that does truly roll over and we start losing 29K and 28K, a lot of these gains, I think you're going to see a lot of Eiffel Tower type charts on all those Bitcoin miners.
Yeah, you're looking anywhere between $7 and $12 move here. But, speaking of liquidity, Phil, look at the federal government. They don't look too liquid with government receipts.
Yeah, this chart, I don't know. I don't know how you can say we're going to go into a bull market when you have tax receipts printing down here. And you guys can see historically, it's not like, don't take our word for it, take the market's word for it. And what's odd about this move, Bob, as I was looking at that chart, because again, it's another chart that just jumps out you and smacks you in the head, is that I don't think, looking at going back to the 70s, that we saw a downturn in tax receipts without a recession already firing. So does
No.
this mean like we're going into like the world's worst recession? You know what I mean? Because like, usually when you get a down swoon like this in tax receipts, you're already getting your GDP contracting. So it's really really an interesting read here.
Yeah, I think it's just a bizarre manipulation of the data that is showing that that's why we're not in quote unquote recession. Well, the problem is these recession numbers are based on nominal, right? So,
Yeah.
if you have 5% inflation, you can say, well, I'm still positive GDP. But
Right.
if you fix the inflation out of the number, then we're absolutely in a recession already from purchasing power point of view. But this isn't the only liquidity issue we have. You have another chart that's pretty wild.
Yeah, so we were discussing why would, if everything's kind of pointing down and the liquidity model is pointing down, why would we still be going up? And part of the reason I think this is my theory, is that now I have this chart here basically is reverse repo with the SPX in orange. So reverse repo is blue. I inverted it because the reverse repo has an inverse relationship with the market. So I inverted the reverse repo so it would move like the market moves up and down. And then in orange there I have the S&P 500. So unlike August, for example, right, the market got really divergent from the net liquidity model. Okay. Our reverse repo was down at that time, and then the market snapped back down. Now, if you'll notice here, the reverse repo markets are driving higher. And part of the problem I think we have, Bob, is that when the Treasury issues debt, it drives the Treasury balance up, and driving the Treasury balance up has a negative effect on liquidity for the markets, right? However, if they are issuing longer dated or duration, then that usually is the case. What's been different this time, and it's an anomaly, is that Yellen's been issuing short dated stuff, right? T-bills. So that tends to not have quite the same effect. And so in that environment, now she probably will get back to the longer duration stuff, which will kind of normalize things that we're used to seeing. But I think until then, I think the reverse repo levels are actually more important here and more of a driver. So going to be keying in on the levels on the reverse repo and looking for a turn in that, which would probably see a fairly quick reaction from the stock market. But I think that's why we're getting this deviation, because it's like we got the risk off signal, and I think even we're going to get a weekly risk off signal next week, which are the more powerful ones when it comes to the net liquidity. The Fed's still rolling out their balance sheet, and they basically said they're not going to stop. They're going to keep it constant like this, which means you're going to see anywhere from 25 to 50 billion dollars of their balance sheet rolled off back onto the banks. So that's every week that amount of liquidity gets taken out of the system. Now, to the counterpoint, the reverse repo market even here still has 1.74 trillion in it. So could it continue on? Yes. Will it continue on until it zeroes out? Not very likely. I think things are really super euphoric here, and we've written a ton of divergences technically, which don't usually give us another thrust higher. So I think that's just it's a weird anomaly, a weird environment right here, Bob. And I think that's why we're seeing kind of this weird move. Almost acts like there's QE going on. If you look at like the daily chart, it has that QE look to it, but there is no QE. There's tightening going on, but we just have this weird relationship with reverse repo markets right now.
Yeah, I mean, look, I think the Fed, if he raises rates again next week, then it's gonna be harder and harder and harder for Janet Yellen to stay so short on her duration.
That's right.
And I think that's probably why he's doing it. He's trying to find a point where this thing breaks. And we talked about this last week, is that you have CPI is probably on its nadir here, and it's going to turn back up higher. So we may see July and August rate raises, but if he's true to his form, he's going to try to break Yellen. If they're complicit with each other, then we'll see Bitcoin, gold, silver, the miners, the commodities absolutely roar, and we're going to have a Weimar Republic move.
Yeah, you're going to want to own those assets because your dollars are going to get worthless real quick. So,
and I think that's part of what we're seeing with the dollar falling too. People are getting cute in the game. Look, they can't keep things perfectly. And look, Phil and I don't care if the market goes up or down. I really could care less. I just want to make money from it. But what I'm worried about is that they're going to get it so wrong that they're going to cause a deflationary roll off, and those are the hardest to trade. So because the government's going to panic and do all kinds of stupid stuff, and we're going to be end up like 2008 again, where you're down big one day, up big the next day, and the market just goes crazy.
Yeah, I agree. So anyway, guys, that's kind of our take there on what's going on with the market. So we're looking for, I think, after the VIX expiration on Wednesday, and we get into a window of weakness that usually comes with OPEX, which is on Friday, and that would roll into next week. So we'll see what kind of reaction we get from there. Otherwise, thanks for watching, guys. Please hit like and subscribe. Check out our specials over at tradegenius.co, and we'll see you on tomorrow's video. Thanks for watching.
Trade Genius.